Hey guys, this is a quick breakdown of what liquidity is now. And I know I broke it down a little bit on one of the breakdowns. However, this is just for a quick reference to it. So essentially, liquidity is where areas of where people place their stop losses, and more importantly, these are where retail traders place their stop losses. Although we are retail traders, we are using a different method. We're not using the standard retail methods of support and resistance, trend lines, things like that. If Let me just draw something. Actually, I don't know why I'm doing that. I can just do this. Magic. All right, there we go. Okay, so say for example, we get an impulsive move from here, and then okay, so say for example we get this. Okay, actually no, you know what, I want to get rid of this because it's going to confuse everyone. Okay, so say we got a massive impulse. Okay, before that it broke structure of this. Okay, so it broke previous structure as an impulse. Okay, so this is so our order block is sitting here. Okay, there's a nice level of inefficiency sitting above it, so it's very, very clear. Okay, but what you get is you may get positions like this, is where you get an impulse. Okay, it didn't break structure, however the next one, if we look at it, it's broken structure. Okay, and what does that mean is that this is in theory an OB. Okay, and then when we look at it, we get a reaction. Okay, the next reaction obviously probably won't even break the high. It might do, might not do, however it won't be overly impulsive. There's a reason for that. It's because this is where there's engineering of liquidity grabs, because you have to think about it, is at this point our OB is sitting here, this inefficiency is sitting here. This is a very strong order block, right? However, you're probably looking at this order block, and it's completely valid to take. However, you have to understand is if you do take it, it's going to be very short-lived because of what's sitting below. Now, what's also formed is when you get an impulse, you get a double. You're trading off a double bottom, so it's a very strong support level. But even though that we're entering off an OB, okay, we have to really think about is the fact that it's formed a support level. Retail traders are entering here, okay, and what does that mean? Their stop losses are going to be below the low, just where yours is, if you use this OB. But the banks will make them happy for a little bit, okay, and then what's going to happen from here? Price is going to come crashing down to this OB, and then a huge impulse. Okay, now this huge impulse is why. Oh no, let me do this and then carry on from there. Oh no, oh no. Okay, that's fine. Yeah, so what happens next is that it comes crashing down, grabs all the liquidity that is sitting here. So I'll just show you with this. So it grabs all that liquidity, touches that OB, then you get an impulsive move. This is why we look for the impulsive move, because this is where the official order block is for our confirmation entry, and that's what we get at the entry. The reason that we get the entry is, remember that why order blocks work is, so the banks have obviously they have to sell, okay, to grab the liquidity, and they have to buy. They don't use stop losses, so they're in loss here. They need to mitigate their loss by getting their trade back to entry and then carry on with their impulsive move. This is where we enter, and that is why we enter. I didn't draw it far enough, but there's an OB here. Okay, there's an OB sitting. Okay, I didn't draw it the best, but there's an OB there. Okay, and that's why you get an impulse, and that's where we enter. But that's the thing to look for, is when you get double bottoms or triple bottoms or double tops or whatever it is, any retail sort of confluence you have to think about is the banks are going to go against it, right? So we need to think about where liquidity is sitting. So although this is a valid OB, because we did get a break structure, and it did break this structure, for example, in this sort of situation, this made up situation, it's still a very valid OB. However, you have to look at the bigger picture, look at the details, pay attention to what's actually going on, because there's still inefficiency sitting below, there's still an OB sitting there. Even though it takes, I think what happens is, because it takes so long, you can become slightly impatient, and I was exactly the same. You can be slightly impatient and not wait for the OB that you like. When you find a price that you like, stick with it. Okay, if it doesn't get there, it doesn't get there. It's not a problem. Okay, you don't need to enter. You don't need to trade every day. You don't need to enter the trade. You don't need to. You don't have to chase it. But as long as you understand what's going on, it's fine. However, even if it does come crashing down, okay, and you missed this OB as a risk entry, it doesn't matter. You'd think about, because you got an impulsive move. This impulsive move has broken 1, 2, 3 structures, very strong. Okay, there's an OB sitting here. You just need to wait for that, and then you can carry on the move. Okay, that's why you get areas of consolidation. This is what it will look like, but this is really what's going on. It's engineering the market to do basically a liquidity grab, to trap traders in, collect orders. Once enough orders are collected, those traders get taken out, and then we come into the market. So we could have entered either here or here as a risk entry, confirmation entry. So that was a quick touch on what liquidity is, and understanding when we talk about mitigation, understanding what mitigation is, and understanding why we don't use, although we get a break of structure, why certain OBs are better than others. It's obviously not always as clear as this, which I'm sure all of you understand. However, it's just something to bear in mind, is just areas of strong support or resistance, or for example trendline taps. You to think that there are going to be liquidity sitting around it, because this is where people place their stop losses. But yeah, so that was a quick touch on what liquidity is and what mitigation is.